Hey, what's up, guys? This is the Turnpike channel back. It's been a while since I've last uploaded, but I guess it's because I just had to put my foot off the accelerator trading because, well, it's much needed. Needed a bit of a break, kind of have to refocus a little bit and reevaluate things because at the moment trading is on a bit of a rocky waves for me at the moment. So yeah, I took a step back, thought about it a little bit more, and took taking a different approach when it comes to trading. And currently this is not my live account. Previous videos I've been using live account. Now I'm back to paper trading, back to the fundamentals, back to working on what needs to be worked on before I can go back onto a live account, right? So anyway, um, what do I need to do? Um, well, I'm gonna just update you on this trade. Bear in mind it is paper trading, so it's not actually a live account. But what happened is I'm going to explain my new approach when it comes to the markets. So if we go down to the 4 hour, so we are in AUD USD. So we are buying the Australian dollar and selling the United States dollar. So at the moment, I've just marked out a key zone here, right? If you go back to the 1 hour, you can see this is quite key where price has come down and rejected it multiple times, right? And right here, see, price is now trading above this this key zone. So what I've done here is, I was looking for buys really. So because you can see a couple of wicks here, price is rejecting this key zone. Most likely wants to move up, right? So if I was looking for an opportunity, I would be looking for buys. And if we actually go into what do you call it? Yeah, execution, you can see, right? The first buy I bought about here on this candlestick because price was trading around here, and then actually I could always replay it for you. So yeah, price, replay that. Price was trading about here, as you can see, right? And suddenly we had strong momentum where it broke up, and then I was like, okay, I'm gonna take a buy, right? Broke the high of this structure, and I took a buy, all right, because I saw some momentum, and price once is rejecting this level quite a bit. So I took position, put my stop loss down here, a good 10 pips, and then price I wasn't drawdown to start with, but then price continued up, broke the trend line, and we are currently here, as you can see. So that was my first entry, and then as price moved up, well, I took a second, and I scaled into my position, about a quarter of my position size. So I put in about 250,000 units extra, as you can see right here. But my major flaw was I didn't wait for the candle to close, which wasn't ideal because price came all the way up here. If you can see the exact, yeah, I bought right up here. Candle wicked all the way down, so we had a massive wick. There was quite a bit of selling pressure on this level, which is you can see why, because this is a key level. So price came all the way down, and I scaled in, and my my break even level is about here, moved up, and price moved all the way down, just below my break even level. So I was a bit in a drawdown again, and then suddenly massive momentum, which is giving me even more confidence that the trade, there's a strong buyers in this market. So right, and then I have this third line where I'm going to scale in again. So if price breaks above this line and closes above, I'm going to scale in again about 250,000 units, right? But this time I'm going to wait for the price to actually close above this line. So yeah, and I've got take profit of about here. If we go to the 1 hour, makes sense. Like there's a strong, it's a good zone, right? And price isn't just going to stop in the middle of nowhere. It's gonna try to get somewhere. So I decided to target the zone right here. So if just excuse that. If I come all the way down here, back to the 5 minute, yes. So at the moment, yeah, we've been in an uptrend. If I get my EMAs, I like to use my EMAs when it comes to 5 minutes, like just the minute charts, because it's much more accurate. Whereas the 4 hours, it's not the most helpful because it takes it's more of a short term. Right, I'd rather use a simple EMA when it comes to this. So yeah, here we can see a nice wick on this 4 hour. In 50 minutes, this candle's going to close, and it looks like it's going to close bullish, right? Which is a good sign for it to continue all the way up. And as you can see, it's a nice little take profit right here, about 3.6%, or 3.6 to 1 risk to reward ratio. So yeah, it seems quite nice, that, but it's a bit of a counter trend trade. But if you ask me, the US dollar is looking quite weak when you look at other pairs, like for example the United States Canadian dollar. Price has been dropping, and as you can see, I took a buy on this position, which actually I ended up closing before I hit my stop loss. So I saved myself an extra 50% of losses. So instead of taking a 1% loss, as it's predetermined risk every time I enter a trade, I took half that, which is good because it will increase your chance of profitability if you cut your losses short and let your winners ride. And that's why I scaled in on this one, because I can see it's a winning trade, and I decided to scale in more. So yeah, really, my new approach is just waiting for the market to reach a key zone, or an area of support or resistance, waiting for it to show me signs of rejection, and having establishing my bias. Okay, it wants to go up or it wants to go down. And once I see like okay, price is here, it's rejected, broke this high, cool, right, momentum right here, broke it, enter, right? That's my approach. I enter on the breakout. I don't wait for a retest, because I should place a stop loss somewhere far away where it would likely not go to if it retested. So yeah, that is my entry method when it comes to the market. And as you can see, also another note, charts, the candlesticks are all black, and I think that is a good way of trading, because otherwise your emotions will get involved when you see that red candlestick or that green candlestick, etc., etc. So it's a nice way of cutting out emotions. And honestly, for me, I think the most important part of trading now is me just working on my psychology. I think that's what's holding me back, like, from most of the trades I've been taking. So yeah, at the moment, psychology is what I'm trying to work on. Anyway, yeah, I'm going to continue holding this trade until further notice. And yeah, for the day, I have already taken one trade, and that's minus 0.5%. So I'm doing better than I would have than if I was to hold the trade until I hit my stop loss. So which is a good thing. So I count that as a good trade, because I lost smaller than I would have usually lost. The only bad trade is if you ever take a massive loss, which is more than what your risk tolerance is. And at the moment, I can take a 1% loss. But however, even better, I took less than a 1% loss. So I count that as a good trade in my books. So this is the second trade of the day. It's pre-New York session. New York session is about to come up, and it'll be interesting to see where that moves the markets. So yeah, at the moment, I am negative 0.5% down, but closing this trade, if the trade closes, actually, in fact, I wonder, I could close this trade right now and I'll actually be profitable because at the moment I have covered my losses and now I'm making more than what I was losing in the previous trade. So it's all about, trading is all about psychology, risk management, and, last and most importantly, your technical analysis, fundamental, or just your analysis. That's it. And that's all I have to say. So thank you very much for watching. And, if you want to stick around, stick around.